Yet another quadruple quadruple expiration is upon us. What are we going to get? We are going to get volatility. Bulls are trying to make a stand, folks. We'll give you that level this morning. They're digging their heels in. Let's see if he can hold off the open and throughout the entire day. As we always on a quad witch, we have CC Lagator on at 8:35 to give us his outlook on the open interest and potential price action because of the options expiration. Earnings. Oh boy. Good and then not so good and then good in turning into horrible. That's it, folks. Jam-packed show, pre-market prep. Little sports at the top, but not too much. Let's roll that intro, Brent.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Here, let's pop these charts up here on this Friday, quad witch expiration. Trading in the red, but trying to find a home here on the dailies. We'll talk about that when the other co-hosts come on. The Bucks still quiet, hanging up near resistance, but not punching through. TLT just bouncing around $91 area, down 15 cents, 91.09. USO down 53 cents after a big green candle yesterday. GLD down $1.38, but still near all-time highs. SLV down 31 cents, 30.19. Bitcoin futures flat at 84,180. Let's bring in Dennis and let's bring in Christian and let's get to these markets, guys. Quad witch is upon us.
It is definitely upon us here. I expect some volatility because we've had volatility going into quad witch. So when you got volatility going into quad witch, you're bound to have volatility on quad witch. So explain quad witch quickly, Joel, and then Christian is going to give his thoughts here too. But just give us,
it's expiration. Yeah, expiration of the futures, expiration of options on futures, expiration on stock and stock indexes, and then I don't know, triple witch, single stock futures. I think there's one commodity guy that
we always called it triple witch because we didn't like the single stock futures stuff.
Yeah, no, they never really caught on. You want a quick expiration story?
Yes.
I can't remember the year, and I'm not going to give you the year because people are really going to make fun of me if I give the year. But it was the first one in the S&P 500 pit, and it was off the open, and the market just started going straight up. So I'm like, I'll buy one, and I carted up, and whoever it was, and it's going up, and I'm like, wow, this is really going up a lot. And so I sold it, and I carted it up, and I remember I was looking at the S&Ps, I was looking at the Dow, and the Dow was up 65 points. Whoo! Wow. I mean, that was a big rally off the open. And then I don't know if some news came out or what happened, but by the time I carded it up and went to turn my card in at the desk, the Dow was down 40. And that was like, oh my God, we just had 100-point move in the Dow. That was probably like a 10-point move in the S&Ps. Yeah, and everyone was like, oh my God. And I remember talking to Barry Lynn, who started Lynn Waldock, a futures firm. And I'm just like, I just can't believe it. I'm like, oh man, I really hope I sold that. That was such a big move. And yeah, I remember him saying to me, yeah, oh, this is just things to come. Things are going to get a lot more volatile. Well, Barry, if you're still alive, 100 points in the Dow is absolutely
almost nothing. Oh,
yeah.
Absolutely nothing. But it's all on a percentage basis. So there you go.
Yep.
Christian.
Yep.
Options expiration.
Happy Friday.
How'd your bracket do?
I don't know if you saw this little school yesterday called McNeese. Being somebody mentioned McNeese yesterday as the college to watch. Anybody know where McNeese is located?
No.
Yes, yes.
Of course
It's in
Joel knows.
Louisiana.
Yes, and congrats by the
And
way to Michigan. Where's your Michigan shirt today, Joel?
well, we won last night, but I'll tell you two things about McNeese State. I think they're one of the 4 colleges in the country that have a rodeo team. Yes,
A
yes.
rodeo team. Okay, is there a
And
rodeo March Madness too?
no, they don't. There'd be the Final Four. And then the other interesting thing about McNeese State is that they have Did you watch any of the pregame? They have their student manager has a huge NIL contract. He's like a social media star. I don't know what his name is, but like they did a whole thing on him on their student manager. But that was a good upset. Michigan looked dog tired. They pulled it out. We won. We're in the final 32. That's all that's all
Hey,
I can.
survive in advance. It doesn't. You don't have to
Exactly.
be
That's what my
pretty. You
daughter
just
Dana texted me last night at after the game was over. 1:45. So that's it. Let's move on. No more sports.
ah. All right. Quadruple witching, yes. There will be a lot of volume on the open. It's called. You don't hear this too much anymore, but it's moo market on open, because index futures will expire, so dealers will be putting down. Some of these dealers, like basically what I used to do on an institutional trading desk, the
Hmm.
Delta One trading desk, is um, those traders will essentially be owning those future contracts to the very end of the contract, which expires on the open of today. So they will be offsetting those contracts with baskets of stock. So you'll
Yeah.
see a whole bunch of volume, and like don't get confused today by you'll see like a whole bunch of volume of like let's say Apple or Nvidia, and people are like, oh, what's going on in the stock? And it's just tied to the expiration of futures contracts. So that's on the open. The
The,
close also, I know it's a huge options expiration. We're going to get CC on later to talk, and he always gives some great information on that. So I'm looking forward to that. But also, you have index rebalancing, which people kind of overlook that, but all of the S&P indices. So when you think about not just SPY and things like that, but also all the equally weighted indices, so things like XRT, XHB, XBI, all of those foot back to their benchmark weights. The variable that fluctuates from one quarter to the next is price. So all of those things have to be reset back, and all that volume takes place on the close.
and that volume offers so many opportunities for the short-term day trader. And I tell you, if I went back through my 25-year trading career, some of my best days are on options expiration. So I get aggressive. I increase my size, sometimes 3 times, 4 times bigger than I normally trade. And it's almost all fading. Where you get a stocks that want to trade here, they might open here, and then I'm shorting a lot of stocks, or stocks might trade here. They might open here, and then I'm buying a lot of stocks. Same thing for the close. Stock might be trading here right near the close and closes here, then I'll be short it. If the stocks are trading here and then closes down here, I might be long it. So if you are in the STN room, I'll be taking you guys through the open here today. We'll be talking about the imbalances. We'll be talking about a lot of cool stuff there. If you wanted to join, it's at stocktradernetwork.com. But we'll be going through a lot of these strategies there today. But let's get to,
Dennis,
the
I just want to make
markets.
one note. I just want to make
Yep.
just one thing. The trading that you're doing has absolutely nothing to do with any of your opinions. Has absolutely nothing to do with any upgrade, downgrade, nothing. Nothing. It's just based on your observance of order flow
Mm-hmm.
on this day. You don't care if
Yep.
you're long X amount, short X amount. You just know, and that's hard to do. Just you put the I mean, you put the orders in and let them go. So just people, it's not like it's mathematically based. So I just wanted to point that. But let's get to Dennis. Let's start with some of the unusual action after the close yesterday in the steel sector.
Well, yeah, we can start there. We obviously had a lot of earnings as well that have faded, but what was interesting is we had two steel stocks, both independently, randomly warn on earnings yesterday. First was U.S. Steel. That broke just after 4 o'clock, so pretty early there because it started trading down. I was like, what's going on U.S. Steel? And then you see, they came out with some first quarter guidance. They're seeing losses in the first quarter of 53 cents to 49 cents. Analyst estimates were only 30-cent loss. So it wasn't going to be a great quarter for U.S. Steel to begin with, but, they're lowering it again. Stock got beat up. It has bounced. It's only trading down 30 cents here now, so it has bounced. But then, not to be outdone, Nucor, literally 20 minutes later, comes out and says, well, we're warning too. Nucor came out, adjusted Q1, 50 cents to 60 cents. Analyst estimates were up at $1.06. So they are blaming from their release here, steel product segment to decrease on the quarter primarily due to lower average selling prices. And Nucor getting hit a little bit harder. I am long Nucor in my long-term account. Been long it for a while, just diversification there. Down $3.50 here this morning. So you got a little bit of weakness here from a sector that we weren't expecting any news from last night.
But tariffs are supposed to help this out, right? That's what
They may help them out, but they're not helping them out in the first quarter. At least that's what the companies say. So maybe there's some light at the end of the tunnel here for the tariffs. There's not a lot of stocks that have been benefiting from the tariffs. We know some of the steel stocks, the U.S. steel stockers, may benefit from the tariffs.
How about the buoyancy in this X since the deal was called off? Remember when
because people think there's going to be another deal. Cleveland Cliffs has talked. They think there's going to be another deal here. They also it has helped. Don't kid yourself with the tariff talk. Where U.S. Steel. Obviously Trump's going to be doing what he can to help U.S. Steel. So I mean that helps as well. But there was a deal. There still is. It's kind of dead. It's pretty much dead. But that deal on the table was for $54. I think people still think that there's a potential deal here. I'm not buying U.S. Steel at these prices though, because honestly, like when you do a valuation perspective, I've always thought Nucor was best of breed, but there hasn't really been any good steel stock in the last year.
All right, you want to do earnings, and I think we got to go to this Micron here.
We do.
Holy mackerel. I mean, they beat. It was a good quarter, right? 156, 142, beat on sales by a smidgen. They upped guidance. Man, it caught a bid. We were following this one to 110. Missed the expected move by a point. And then completely fell apart here, Dennis. Talk about the price action. And I don't think you got down and dirty in this one, did you?
No, but I should have. And I mean, blindly selling the rip, we've been talking about this, is working better than buy the dip ever did. I keep saying this year, but blindly selling the rip just continues to work. I actually had a trader message me last night from a prop firm and saying, why don't I just short Micron? And I'm like, you know what? You'd probably make money. This was when the stock was 107 last night or 108. How high did it get, Joel?
Boom. Let me go to trusty data window. It got to 109.90.
So, and we had those resistance points up at 110. We had talked about that going in. Expected move, I believe, was around $9. So that would have been up at a 111, 112. So it didn't quite get up to that. CC Lagator, who'll be on later, always covers those expected moves really well. But here you have the slow, steady leak overnight. Da-doom, 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 da-doom. There's just so many people who are overinvested in U.S. tech, me being one of them. So many people who are just looking for opportunities to take profits, me being one of them. So many people just underwater, from where they were 3 months ago in a lot of stocks. They use rips to lighten up. Institutions use rips to lighten up. Man, this wasn't like all of a sudden, like, they said something on the call and it just all went to hell in a handbasket. This was just a slow, steady leak all night long. And you go from being up 7 to now down almost 4 points. Man, this tape, it's a tough tape. Christian Fromhertz. I mean, this tape, it's been tough, man. I've argued, and I'm still going to argue, that there is a play to short every single stock into earnings. And again, I don't know if I advise this. I don't give advice on the show, but there's been a play to short every single stock in earnings because one, the stocks that go down often continue to go down. The stocks that go up often come back in. And I mean, if we would have just shorted every stock last night, Lennar, well, you'd be up because it went straight down. Nike, well, you would have taken some heat, but then she gave her all back and went straight down. Micron, you would have taken some heat, but then she went up and went back straight down. And then FedEx has been down all night. You'd been 4 for 4. I mean, should we just stop doing everything else and just start shorting every single earnings report?
Oh, I mean, I think in this environment, sure. I mean, that's what's working, and you've been calling that, in terms of the fade trade, over the last, I don't know how long, but I know that you bring up that trade more frequently when we've got a market like we do right now, and I think so. If you're looking for the culprit in this, I mean, I look, they're talking about margin guide offsets their sales outlook. But I mean, you just kind of felt like this was going to happen. Anything that pops up like this, especially right now in this group of tech or AI, the market and the more popular it is too, because I think out of the names that were reporting last night, I think more eyes are probably on Micron than anything else. But it seems like the more eyes that are on something, you can't hold these gains, and it just shows right now the temperature of this market right now. They're just not embracing it. There was also an article out that I was reading on Bloomberg this morning about how retail keeps buying the dip, but the institutions are not. Like, the institutions are not taking hold of this market, and they're just kind of sitting on the sidelines. But we talked about this yesterday when we said we had all, I think we mentioned 4 companies that were going to report, and we said, hey, what do you like out of these 4 companies? And it was Micron, Lennar, FedEx, and I forget what the fourth one, Nike. Did I say Nike? And we all kind of said, hey, what do who likes these companies? And there was kind of crickets. So
you asked me what I was buying, and I said nothing.
Yeah, exactly.
Yeah. Similar trading pattern here in Nike. That much needed recovery is not blossomed yet. This one, Dennis talks about blindly shorting it. Maybe shorten it at the close and then shorten more on a pop, because this thing got over $77. They had a big beat, 54 versus 28. They beat on revenues. Algo's reading that. I don't know what the heck. What did they say? Making progress with win now strategic priority reinforces its confidence on the right operating environment. What am I missing here? What did they say? Negative.
Well, they
said
same
the
thing.
inventory issues. They've got like major inventory issues too. So like, how do they get rid of that inventory overhang? I mean, that's just not a good sign. That they have to. I saw threatened by inventory reset. It just sounds nasty. Go ahead, Dennis. I'm sorry.
Well, this is just it. Like, the market will find a reason. So the market wants to take profits. The market wants to sell the rep, and they will find a fundamental reason to do it, which is why, again, the strategy has been to sell the rep, not only on earnings stocks, but on everything. Just like yesterday, S&Ps ripping after the open, looking like, wow, man, this is going to be a really killer day. This is the bottom it's in. And you know what? Now, afternoon comes, we just sell her back off. Get an overnight rally a little bit? No, we're selling it off. I mean, there's just so much overhead supply. And, just take it away from, Nike is an eternal dog. I mean, the dog, bow, wow, wow. Like, got fleas, flea infestation happening here. It's been a bad stock for a very, very long time, and not a good company for a very long time here either. Our friend Jeff Mackey may have said it best. He talked about how nobody under the age of 30 knows who Michael Jordan even, they know who Michael Jordan is, but they don't respect him at all. It's about LeBron. It's about this. They're still like back in the day, like where Michael Jordan, Tiger Woods was the Nike brand. I'm arguing, and I know people have argued this, with me, but they don't have that, I just don't feel like they have that brand recognition anymore. that they've lost it. Like, do you remember Bo? Like, it was always like whoever was the big gun, they were all over it. Bo knows. That was a Nike advertisements. Remember that, Joel? Like,
Of course,
everything.
yeah.
Every athlete that was on the very top of his game wore Nike stuff. Every single one. It doesn't happen as much anymore. And now people will argue with me because, yes, Nike still has some athletics. They have Luka. They have some sponsors. But I feel like it's not the same. I feel like it's not every single athlete that is, on top of their game wearing Nike gear. And it was like that 25 years ago. Like, all of them. They're wearing different sneakers. On-ons are everywhere. There's just different, the brands that have eaten their lunch. I feel like it's not like, I feel like the brand, as much as we've been saying Tesla, and Musk has, been hurting the brand, Nike's brand has been hurt for years here. They've lost their way as best in breed. They've lost their way as the brand that I have to wear. I'm going out and buying my Nike sneakers. People don't think like that anymore. That's the major problem.
Worst footwear revenue in more than a decade.
And take a look at the other names in this space right now. You brought up ONON, which again I think is popular. ONON also had a good quarter, and look at that fade that happened on the day that they reported earnings. This does not. All of these charts do not look good. And then the disaster in the group is continues to be Deckers. That name, has not found any footing at all, and just continues to get, I mean, the buy the dip mentality. Imagine buying the dip in this thing, when it had earnings and it was around like 180, 175. The stock's at 115 and still going down. Still no evidence of the bottom is in this stock.
These charts are so ugly. Oh my gosh.
Money Mitch making a great point in the chat. It's the point that we've been making on the show the last couple of days here too. Consumer issues. He's absolutely right. This is bigger than just Nike. I've been arguing Nike for a long time, why Nike's been depressed. But, there isn't every retail stock's been depressed. But there's a lot of retail depression this year, like full-on depression. Deckers goes from an all-time high, literally 6 weeks ago at $223. It loses half of its value in 6 weeks. There is consumer issues. And, intern in our STN chat called it a cautious consumer. I think that's right, but is it a consumer that's broken? Money Mitch saying, is the consumer broken? I don't think we're at that point yet, but I think we're at definitely the consumer is cautious. And one is because as much as we're uncertain in the market, the consumer is also uncertain because, hey, job certainty, maybe not there. I've talked to my brother-in-law. He was in an electrical company. This is in Canada, so boots on the ground, just in Canada. I'm like, how is it? It's like, it's okay. But just being cautious here because I could see how it could slow down. I think that's what the consumer is seeing. They could see a path where the economy goes south. They could see a path where their job security maybe is not as secure as it was. They could see a path where they may not be able to get a job. I mean, they can see a path where they may have to save for a rainy day again. So I think that's why the airlines have been hit so hard. The cruise lines have been hit so hard. I think it's why you're seeing stocks, even like Deckers getting hit hard here, because the consumer is cautious right now and holding back from spending. And that's a major issue for all these retail names.
I just want to say for Nike, you're taking out the low of the move, the February low by a nice margin. So we can use 68.62 as resistance. You may be headed for the COVID low here at $60 here in Nike. And only one comment, and I've been saying this about Deckers: you can't have winter shoes and winter boots that you can't wear in the snow. You can't wear them in the snow.
Those would be useless where I'm at.
I don't understand it. But we've talked about some stocks that had some pops and some drops. Why don't we just talk about an utter disaster? The bellwether of the economy. FedEx. FedEx used to be. FedEx
before they lost all the business.
451 versus 454. Slight beat on sales. Lower fiscal year revenue forecast. Where is the bottom in FedEx?
This is consumers issues too. It shows up here as well. I mean, nothing shows up more in FedEx than the consumer. Consumer cautious. Now, again, FedEx has issues, UPS has issues. They've lost all the Amazon business here now. It's not great for them, from just a longer term perspective. But there's consumer issues here. Consumer cautious, showing up here as well. I mean, the theme is the same across all retail names, and you can put FedEx in the retail category here. It's cautiousness. Cautious buying, if any buying at all. This has been a stock, and these have been value traps here, folks. FedEx and UPS, we've been talking about these as value traps, and we've been correct on these. We can look and say, hey, the PEs come way down for FedEx, where once upon a time this thing was trading 22, 25 times earnings. The forward PE on FedEx is 11. UPS, once upon a time, was trading like 17, 18, 25 times earnings. Forward PE is 14. Yeah, they've gotten cheap. But you know what? They gotten cheap for a reason, because the earnings aren't that great. So I don't know. I think they're still value traps. I'm staying away.
Look at this UPS disaster here. That was the reason I was like, how could you go long into the report after that UPS just can need annihilation? I could ask Christian about these charts, but they probably haven't been on his screen.
These are not Christian Fromhertz stocks. He is the master of finding the momentum. And look, he's went overseas to find the momentum. He's went, yesterday you were taking, some natural gas plays to find momentum. I mean, this guy, he's the one person that doesn't marry any stock. Am I correct here? You never get attached and married forever to any of these names.
The trend has to support anything that I'm doing, and I'll tell you what, I'm not finding a whole lot of stocks in that area right now. And just to kind of bring it back to the overall market, just really quick. But if you look at just a SPY chart of this week, do you guys realize that basically price hasn't gone anywhere all week? We've been up, we've been down a little bit. It's been choppy. But I don't know if you got a 1 hour chart there in your arsenal.
Yeah, I can do it. Oh yeah, for sure.
But bring up a 1 hour chart. It just, to me, puts things in perspective of where we started the week. We're right back to where we started this week. And I think it's a really tough market right now. I think also patience is required for this market. I do not see a lot of positives. I mean, even this morning, it's really tough to be positive with all those earnings reports, and the majority of them just going to the downside and just not looking good. And those stocks are not my favorite stocks, but still, to see all of them move down is not a great sign.
4 for 4. And
yeah. I'll do Lennar in 1 second. But we had Tim Quas in the STN room on Wednesday, and you know how he shows his all the different sectors in his categories, and in the first column it has momentum, and that is momentum stocks, right? Stocks that, based on his criteria, are in momentum. Dennis, tell him how many stocks are in there.
0.
I was going to guess 0 as well.
Not one stock in there, and I was like, Tim, how often do you see that? He said it's very rare. He said once or twice a year maybe, but he's it's very rare to see 0 stocks in the momentum filter. So that's just showing you the type of market that we're in.
Does he think? Can I just ask a quick question? Sorry. Does he think is that any way a contrarian signal, or is that just nasty?
I was thinking that too.
Or is it it's a contrarian?
Contrarian.
Well, I think it is a contrarian signal. It's telling you those are the strategies that are working. The fade trade working very well. My acronym for the year on January, the first week of January came out, was fade. The F in fade was fade. And I put 3 stocks. I shouldn't have put any stocks because they all suck. But fade has been absolutely right. If you've been approaching this year that I'm selling reps, buying dips, selling reps, buying dips. It's been a tough February because the dips, the dips have been bought too, though. We've had wicked 100-point rallies. How many 100-point rallies did we have in February? 7, 8, 9? So there's been some wicked rallies here too, folks. So it has been an excellent trading environment. And again, if you're struggling this year, you got to look and analyze and add a little bit of contrarian maybe to your repertoire there. So it's been a pretty decent year here. I've been chopped up a little bit as well. Sometimes it can get choppy when it gets chop on top of the chop. That's a lot. This is a lot to say right there. But when you get chop on top of the chop, sometimes even the fade trader can get chopped up a little bit here. But, so far so good. In my trading account, I believe I'm up about 9% this year. So, it's been okay. All fades. all contrarian. That's what's been working. Now, does that continue to work? Nothing works forever. You just got to adjust to your environment. We're still in a contrarian environment. It may change next week. Maybe Trump comes out, and says, well, we're making a deal with Canada, and then momentum starts again. You never know what's going to be said. But going back to what you were originally saying, Christian, we started this week. We're kind of in the same spot. But we had a lot of good news this week too, Christian. We had Trump basically golfing and not saying much too negative at all, not really starting any other wars with any other country.
Right.
Nothing extreme. We had Powell somewhat dovish. I think he was somewhat dovish. He's talking about, potential inflation from tariffs being transitory. That's a dovish statement in itself. The market rallied on the presser, and it gives it back again. So, we've had pretty decent tape. Yep.
I'm going to disagree for a second, because I know that everybody thinks it's the Trump and the tariffs and the headlines, but I think that this market has structural issues, and I think that has started with the tech trade and the AI being unwound. I know it's easy, and I agree. Like, I don't like the headline risk, and I think that adds to it. But I think there's been structural issues with this market prior to, putting on tariffs. That just kind of adds to the uncertainty, and that's not very good. But this stuff did not start to look good. Look at just real quick, and we don't have to go too deep into this, but remember, we had this. It's been so much about buy the rumor, sell the news too. Remember. And I think everybody kind of forgot about this, but it was supposed to be Quantum Day yesterday. And we talked about, I thought specifically that this was going to be another buy the rumor, sell the news. But I don't know if you noticed these stocks yesterday. But as that event went on, and there was very little headlines from coming out of NVIDIA, they mentioned that they're going to be doing some things, but all of these stocks started to leg lower. The IONQ, the QBTS, or QUBT. Sorry, I get those two.
Both of those did the same thing anyway.
Yeah, they just continue to leg lower. So again, speaking of the fade trade, which you've been all over and have been very, very right on that, but also buy the rumor, sell the news works again.
Yeah, this is it. We get through these events, and you get through, and it's just hasn't been the thing to get us going. We just don't have any follow through. Like, that's, the lack of, when you don't have a momentum market, it's the lack of follow through that really causes that. You get the initial wave of buyers, and then there's no other buyers, and that's when we start to leak. So, Micron last night, earnings, good. Boom, algos buy it up. No follow through. That's what we're really lacking here. So I think you're absolutely right. I think it was kind of like a perfect storm where we come into this year, everybody's sitting on a lot of gains. We even talked about, coming into this year that a lot of these stocks were closing out the Momo names near the highs, and there'd probably be some profit taking. That's absolutely occurred. And then the profit taking has gone into some fear in some names. It's like, oh crap, I don't want all my gains from last year to go away, so I'm going to take what I got. And then the headlines haven't been great either. So it's kind of been like the perfect storm. So the question is, how do we get out of this mess? How do we get out of it?
CC Lagator is going to figure that out. And,
CC will figure it out.
He's also going to talk to us about this quad witch expiration and the trillions of dollars coming off the board. I'll roll that intro for CC. CC Lagator, Options Learn, founder of Options AI. CC, where do we go from here?
How's it going?
Triple Witch, how you doing today?
Good. I'm here with all the answers to save the economy. Is that what I'm assigned
to? Come on, CC. Save us. You're our only hope.
Zero DTE trading. Zero DTE will save the economy.
Maybe that's the savior.
Okay, talk about the setups here. We've gone through a lot of these together, different setups, you hear all about the huge amounts of unwinding and everything that's going on and offsetting and everything. Perhaps where does this rank? Is this like the biggest unwind ever, or do we have had bigger ones?
It is. It's up there. It's one of the biggest expirations ever. And it's sort of, as we move in time, that tends to happen, right? It's like volume going higher. But, as you can imagine, with what we just saw with the sell-off, with the 10% correction, seeing the VIX, tick up near 30, you have a lot of positions that got placed into today, and they have been, starting to unwind, I would say, even a couple of days ago, and then they will, obviously everything else will expire at the end of the day. And I think the best way to think about a large expiration, particularly after you see such a big move in implied volatility across the market, is that week, those days leading up to that expiration, options and the market structure has a disproportionate effect on how the market is trading, and it can often mask what would be a normal bias that week. And Christian brought it up a little bit earlier. We've essentially bounced between 5,600 and 5,700 in the SPX basically all week. And if you look back, going back 2 weeks to that massive, Monday sell-off, right, which was really the only, I would argue the only, during this whole 10% correction, the only day that seemed a little scary and a little panicky was that Monday 2 weeks ago, or, almost 2 weeks ago. We're essentially in the same place. I think we're going to open probably down near, 56.30 or something like that, right? I think it closed 56.15 on that Monday, that real big, disastrous Monday. So what's happened, I would argue, is there were some massive options positions down near this level, right? And it's kind of wild because it's, obviously options don't control the market. It's the other way around, like sentiment, more buyers than sellers, more sellers than buyers. That's the driving force of the market. But the options backdrop can sort of lend exactly, to the market and to those biases, how it's going to behave like near term. And so if you go back to February, and I'm going to bring up a very specific position out there that some people might know about. In late February, when we were bouncing up along those highs and the market was really struggling, trying to get up above what was it, 61.50 or something like that, right? There was I think last time I was on the show, we might have even mentioned it. There's massive call positioning up there. And it was really, it like put a top on the market for a long time. And we kept kind of hitting that moment, backing off, hitting that point, backing off, right? There was a massive options position that a lot of people talk about, and it's JP Morgan. It's a hedged, a hedged S&P fund. And then what happens is they put that on every quarter. It's usually, what it consists of is they sell upside calls to finance buying a downside protective put spread, right? And it sort of mimics how everybody trades in the market, right? They sell upside calls in the indices, and then they buy puts or put spreads protective, down to the downside. So we were bouncing up near that level. And then, the market started to go down. And then once it looked like it was getting pretty serious, it's down 5%, 6%, everybody started looking down and they're like, man, that put side, we might round trip that trade, that JP Morgan trade, and everybody else that kind of piles in next to it. And on that Monday, 2 weeks ago, we went exactly to the put strike of that JP Morgan trade, which was 55.65, right? And we kind of bounced around there. And then we've sort of now found ourselves up slightly, and we're actually, I guess, trying to get back to that 200-day moving average in SPX. But we're sort of bouncing in this 5,600, 5,700 range in SPX. The options are having a disproportionate effect on the action we're seeing this last week. Now, that JP Morgan trade I'm talking about doesn't expire until the end of this month. It's actually at the end of the quarter. But a ton of other options positions that have piled in these last 2 weeks do expire today, which I would say kind of opens up the door next week to us possibly breaking out of this range. News, I think it would take bad news to send us lower. If we did go lower, it could get ugly, right? It could get very whippy down below here. If we start going higher on some good news into the end of the month, What today will remove is a lot of that resistance really close to where we are, like that 5,700 strike that you could see it the last couple of days. The market's tried to get up above 5,700. It's just like whacked, right? And there's a disproportionate effect of options on that. Some of that stuff gets removed today. And next week, it kind of opens it up a little bit. But I would say, if I had to guess, I think today ends up being kind of slow. I think we start next week kind of slow, volatility-wise. And as we get closer to the end of the month and those tariff deadlines, what are they, like April 2nd? And then that April 2nd big week, because there's a jobs number. You start to get a bunch. You can see it on the vol of the indices right now. It's like vol stays kind of low to start next week. And then that first week of April, it spikes back higher. So market participants are expecting that first week of April to have a lot of volatility. And what I would say is go back and look at the end of February into those first tariff deadlines, which were March 2nd or 4th or whatever they were. The market started anticipating the bad news a little bit. And so we'll see, is this going to be bad news or good news? But I would argue that the end, sort of towards the end of next week, the market probably shows its hand.
Hey, Dennis, did we just get some imbalances here? We just dropped like 12 handles and
we flipped this. We had a lot of buy imbalances showing this morning, and CC's probably looking at this too. We just flipped to sell on almost all of them, and there is some absolute monsters. So like Bank of America, 2.1 million to sell. Citigroup, 570,000 to sell. We don't get NASDAQ imbalances till 9:25, so we don't know anything there. But I tell you, on the New York side, they are to the sell side, and they are massive. Now, that can change. Like CC, explained some of this to us too. Obviously, as traders have positions on, they might be jockeying, against, their open option positions with using the stocks. But I tell you, man, right now, if we opened right now, it'd be a disaster.
And this is, so we're
CC,
down. Yeah.
I just real question, the levels that you're given, are you talking about the front month? You're talking about the front month futures, right? Or are you talking about the cash?
On SPX?
Yeah, so you're talking the cash there at the 55.
Cash, yeah. And the reason that is because that's the most active options trading, like the cash settled. So we were always talking in the SPX.
Okay, that's what I thought.
So that's what I was mean is like we're down. It's always impossible to do this math, but we're down just under 1%, right? Pre-market. So that's about what the expected move was for today in SPX. And I think that should take it to about 56.15 on the open, roughly. And there's something about that level. Like we've spent a lot of time at that level the last 2 weeks. And that's exactly where that Monday crash got to.
All right. What's next?
Also, just add to it, Joel. Consumer staples all went to buy imbalances. So you have all the regular stocks with sell imbalances, and consumer staples all went to buy imbalances. You can tell the institutions are like, it's like as risk off in the imbalances as you could possibly get. I'm just like looking, all the banks sells, the tech stocks that are not New York stocks are all sells. You got industrials are sells, and then you got Procter & Gamble, Coca-Cola, Walmart, Mo, GIS, Kroger, all with buy imbalances. It's hilarious how that works. But, again, this can change, but it's just showing you full risk off morning right now.
And Dennis, we've spoken about, sort of with the big quad or triple witch expiry. Oh, by the way, Christian, the index rebalancing, that should become the new quad. That should be.
Yes, it should. It's absolutely. People always overlook it. I think it's because people don't understand it. They just say they just say options expiration.
Yeah, like the index rebalancing. I mean, that causes all kinds of goofy moves towards the end of the day.
I like goofy moves.
Yeah,
I fade goofy moves.
Well, that's like, Dennis, you and I have talked about this a bunch before, but like those sell imbalances, buy imbalances. Those are a tough read on a morning like this because there's so much like delta drift overnight that, it's a tough call. And it depends which institutions are selling and buying, right? Like if it's option related, then it can sometimes be, like a false signal for that morning. So my hunch is, unless well, how bad? Mitch was talking about the consumer numbers earlier in the chat. Like, how bad were they? Is that what sent us down?
I don't think we've been talking about a cautious consumer overall, and then we were looking at FedEx, Lennar, we're looking, at
the earnings
Nike,
disasters.
the earnings that it had today are consumer stocks, and they're all, not great. So
No,
we've been talking for a while.
Money Mitch was in the chat earlier putting up.
He actually had some consumer numbers.
It was
if you're still in there.
Yeah. But anyway, I was wondering what sent us down. It was sort of like right as I was getting on.
That was the imbalance flip.
Okay.
They were all buying imbalances when I came in, and they all flipped to sell. I think it was the imbalance flip, CC. On the New York Stock Exchange. They all just flipped at the same time right around there.
A Trump tweet about April 2nd. So there are more tariff headlines.
Oh, well,
can I do a joke? I don't mean this to be political, but I want to float this to you guys. Like when Trump tweets.
It's never good. Stop. It's never good when you start. I don't mean to be political, but we know what we're in for here. Half the listeners are going to leave us right now. Okay.
Yeah, no, I was going to say, like, like when the market's trying to rally and he does like a tweet and it like totally kills it. I was going to start calling that like stocks turned orange, but I don't know.
We got a lot.
Very good. I like
it. We might lost 5 listeners, 6 listeners, 10 listeners.
Here we go. Or that's kind of when you're talking to your wife and you want to talk about something and say, before you respond, just let me finish.
Yeah.
And then that's like no, that's not a back response. Okay, so let's put on our forward-looking glasses, okay? And what should we? Is the open critical on days like this? What should we expect, and what comes next?
I think today, barring massive headlines, as always is the case, I don't think you can read much into today. There's going to be a lot of forced positioning. There's going to be a lot of forced closing. There's going to be some goofy stuff like with quad expiration and everything. And Monday, it sort of allows the market to show its true hand. But I would say this April 2nd thing is hanging over the market. And so those headlines are going to build and build and build as we get into that period. And I think, for instance, we've essentially gone sideways for 2 weeks, right? The market it's seemingly volatile intraday, because if you're like us and you're watching it all day, you see kind of these weird moves intraday. But if you just sort of step back and looked at the market, we've consolidated like officially over the last 2 weeks, right? We've kind of gone sideways. I would say that into that end of month, April 2nd, we're probably going to get some sort of, we're either going to bounce, the tariffs are going to, we'll see good economic data that sort of overrules the fear of the tariffs, or the tariffs are for real and we start seeing weakness in the economy, in that jobs number, for instance, and we go down another leg. What I would argue is the VIX going from 30 to 20 the last 2 weeks. If we had just gone sideways like this for 2 weeks, the VIX should be lower, but it is already looking forward to that April 2nd and that jobs number and things like that, and it's going to stay elevated. And so what I would say is, if you feel like you've just missed something in this, move lower, and let's say we rallied a little bit to start next week, and you were really worried about maybe putting on some hedges, and you feel like you've missed it because vol is so much higher and the market's already lower, these prices are probably the best you're going to see for a couple of weeks as far as the cheapness of options. So if you felt like you really, and the best way to think about this is, let's say you're starting to bargain shop in the market and you're starting to look for some stocks to go long, but you kind of want to put out a little hedge against that. Now is probably the time over the next couple of days, because I think it's going to increase in price into the end of the month. And this flip side is, if you are looking for a bounce and you're looking for, us to go to new highs over the next couple of months, you would want to do it in a way like longer term. We are not going to be at a 20 to 25 VIX 4 months from now. most likely. So you have to be very careful about the volatility you're paying out there, right? And so if you are positioning longer term, out to the summer or something like that, absolutely be doing it via spreads and things where you can at least lay off some of that premium. And so if you think about it this way, if you were buying a stock that was, it's just gone from 150 to 100 and you're looking for a bounce up to 130, if you are buying the 105, 110 call, be selling that 130 call, because what's going to happen is if you do get your move, volatility is going to get crushed and you're going to be thanking God you sold that 130 call to cover yourself, and it's going to go right up to there and you're going to have a great position. But if you just buy that 110 call and the stock goes to 115, I mean, it's going to get killed. So that's the way I would think about it, is if you're
take advantage of that. So last thing. So I always talk, like when we have moves and pop like this, either the upside or the downside, I talk about the market calming down and consolidating. And I'm looking at it, when I look at my S&P chart, I see a good, 6-7 days of consolidation. But I mean, I want to see the average daily ranges come in. They are coming in a little bit. Am I being too optimistic here that, obviously this is the quad witch, but that we're going to calm down and that things are just going to get a little quieter? Or is it just there's too many unknowns out there?
Well, what it tells you is, I would say that it's disproportionately being affected by this large expiration, and so it may not be real. If it does turn out to be real, what it probably means, how like you get like a 10% correction, we're so programmed to look for this big V reversal, and like if you miss it, like you're back to the highs. You know what I mean? What it might mean, because you have to, with the options flow part of it, you have to anticipate what would happen after the market started moving, right? So if we start going higher by a couple of percentage points, people are going to start piling back into, normal positioning and sell calls, and we're going to keep hitting some resistance, right? The way that we would actually do some face ripping rally from this point is we probably have to go lower first, right? We would have to really kind of have like a pukey couple of days where the market, the net correction is probably closer to 15%, let's say. And then we'd get that kind of face ripping rally that we all love, but it's terrifying on CNBC, right? And we would love that part. But right now, because we've gone sideways so much, we're probably, if we start going higher, to Dennis's point, I wouldn't feel like you are, missing out and you've got to chase stocks. And in fact, it might be a lot of days where you want to fade those moves higher, because there's going to be a lot of people selling calls into this.
Okay. CC Lagator. At Options Learn, founder of Options AI. CC, we're going to be dialing you up to get you on a little bit more often on Stock Trader Network. So be talking to you next week. Thanks for joining us.
Great to see you guys.
CC.
Okay, Dennis, Mr. Imbalance Man. How are we looking?
They're getting bigger. They're spreading into consumer staples here now. Consumer staples are going into the red now too. Like, look at Burke. Burke was up $3 at one point in time this morning. It's turned red. It's 537,000 shares to sell. I will be trying to buy Burke at the open if this opens like down significantly, because Burke has just been strong as hell. I think there's just an opportunity on these days to like look for fades, not like marrying positions, but quick flips at the open. Like AT&T has 2.5 million shares to sell. AT&T often goes up on down days. So if AT&T wants to open down like 50 cents or something, I will load the boat. Now I don't know if that's going to happen, but it doesn't hurt you to put the order out there. The worst case scenario, you don't get filled. You get filled, you probably make money. Is there a case where AT&T could open down 50 cents and go down $1? Can happen. If it's really crowded, it's possible, but more often than not, usually these things pull back up to fair value relatively quickly. It's going to be interesting. Yeah, Christian?
Yeah, I want to go back to what we were talking about a little just before, about like what helps this market or like what saves this market. And I think too that there's a problem right now with liquidity with this market. It is just not very. I just think that there's a low amount of liquidity in this market too, and that's also like contributing to some of these fast moves. But I don't like back to what we heard with Jay Powell just for a quick second. I don't think he was dovish at all. I think that
I
this
agree,
market.
Christian.
I think that this market is going to need at some point some stimulus. Like, and even Trump said he's like, if he's going to go forward with these, if you kind of look around the corner to this April 2nd,
Sure.
he's saying like we need lower. He wants the Fed to lower interest rates because he knows that it's going to be impactful. So if they're going to stand pat and they're not going to do anything right this second, and they're going to let this play out, then they're eventually like they're going to need to start cutting interest rates because we don't have any other stimulus. The Treasury was pumping liquidity in, with the previous administration. They're not doing that anymore. You don't have any more government stimulus. So again, all I'm doing, I'm not trying to be super negative here. I'm just saying, like, how is this going to work? And I think that the Fed will eventually have to get on board with stimulus and cutting rates. And I don't think that we're there yet. And I think that that's a problem.
So your point being that the Fed bails us out. That's what's going to need to happen here eventually.
The Fed
We're going to need the Fed's help here.
If we start breaking lower and those tariffs do go into effect and the uncertainty increases, the Fed is sitting here with 4.5% interest rates. That is way too high. If we start getting more weakness, as we just went over in the retail sector, which we're seeing it, and all these retail names are breaking down, which indicates that the consumer is really starting to tighten up. They're going to be late because they always are, but they're going to need to jump in and start bringing that interest rate down because I think inflation. Again, sorry to kind of go off on a tangent, but everybody's worried about tariffs and creating inflation. Let me just say something. If people stop buying, you don't have to worry about tariffs because tariffs will go on products that people are buying. If people stop buying, it's a moot point that tariffs are going to create inflation when people are not buying stuff. So I really think that behind the scenes, inflation is going down, and it's going to go down it's going to go down fast. And the Fed is going to be scrambling because there's no demand, and they're going to have to be cutting interest rates when it's too late.
So what does this mean? If the Fed, to your point, was a little bit hawkish, and if, we're seeing a lot of cracks here, does this mean that the markets go a lot lower from this point in time then?
They could. I think, I talked about this range, and eventually it will be broken. And, it could be today that it gets broken because there is a lot of volume that's going to go through, and there's not a lot of liquidity. So it's very interesting. CC thinks it could be next week. I don't know. I think the uncertainty is there that it
could be right now.
Yeah, exactly.
Can I give you what
here?
Can I give you one?
Growing.
Can I give you one caveat to
yes, please.
The Fed lowering rates? What do they know that we don't know?
They're not. This is the problem.
That's what they're going to say. Like, oh my God, the Fed knows we're in so much trouble. They're starting to lower rates, even though
the Fed knows that we're not in trouble and they're staying hawkish. I think if you read it as that he was a little bit hawkish, and Money Mitch is saying the same thing. And again, we asked Blue this question in the STN room, and he was like, I think he really wasn't, he was just neutral. And that's why, he was hawkish, he was dovish. And he said, Blue said he kind of just, was there. He wasn't either. And that's why we're struggling to say if he was hawkish or dovish, because he really wasn't neither. But either way, I mean, if we think he was a little bit hawkish, then it's not about, what he knows. He would be dovish if he knew something bad was coming. Like, we must know something good's coming if he's staying hawkish. I think that it's the same thing with Kramer. Remember Kramer said, they know nothing. They know nothing. Talk to people. Back in 2007, before the financial crisis, and the Fed was behind the ball again. Now, it wasn't Powell then. It was, was it Helicopter Ben then? Was that who took us through the financial crisis? Yeah, Ben Bernanke. But he was like, talk to people. They know nothing. Remember that famous thing? I mean, are we at that point again where the Fed knows nothing? And we are teetering on the economy, falling off a cliff here, and the Fed's doing nothing about it yet. I mean, there's an argument to be made there.
Okay, bumping up against the 9 o'clock hour here, so we're just gonna have to wrap things up. Free falling now. I can, I can change the name of the show to that.
Tom
15
Petty
handles
show.
away is that. I know I wanted to play the song, but then we get in trouble. That was a double bottom from Monday, I believe Monday and Tuesday. So that's only 15 handles away. We could be there before the open. Tim Seymour joining us on Monday to give us this outlook, hopefully a little bit more of a positive outlook on the markets. And so that's it. That's it for this Friday, folks. Good luck out
So,
there.
so again,
Anything
you know,
else?
we're heading over to the STN room to trade this open there. You can join us there at StockTraderNetwork.com if you want to, see how an open's done on an options expiration. So a 7-day free trial in there too. But we're heading over there right now.